Welcome to Illuminati Silver. We tell you the truth about silver. Today is Wednesday, the 16th of June, 2021. And we're looking at what is happening to the news and gold and silver prices first thing this Wednesday morning. We're also looking at important data published yesterday and looking forward to the FED FOMC announcement later today and what gold and silver prices are likely to do as a result of that announcement. So let's take a look. Well, good morning, and yet another sunny morning for us here in the UK, or at least the part of the UK we're in. Now, the last 2 days we've been producing a morning update, and we may continue to do this as there does appear to be some interest, which we're obviously extremely pleased about. And today, Wednesday, is probably the most important day of the week, particularly in our view, as far as gold and silver prices are concerned. But first, let's have a look at what's happening in the news. And the major headline on Bloomberg at the moment is UK inflation surges to 2.1%, unexpectedly passing the Bank of England goal. Now, as we all know, that a number of major economies in the Western world, at least, have sort of targeted inflation at or around 2%. And we saw only a week or so ago that in the United States, the annual rate has actually gone as high as 5%. Though officials are saying this is just transitory. Well, here in the UK, we're now experiencing 2.1%. And we would say that whilst most bank governors and government officials have been relatively dovish or lenient in terms of monetary policy, what we can say from our own bitter experience is that officials at the Bank of England, primarily being what we call technocrats, will be very concerned to see inflation rising much above 2%. They will no doubt give the signal that it's only a small-term or short-term blip, but they will be worried and they will be debating it for sure. UK economic growth accelerated in April as lockdown eased. China's campaign to control commodities go into overdrive. And angry UK Tories warn Johnson freedom delay must be final. In other words, they want to get rid of all of the restrictions that COVID-19 has caused. Looking at the latest news on the left-hand side of the page, we can see Europe's biggest debt collector sees rise in late payments. Not surprising there, really. India plans $6.8 billion program to boost health infrastructure, which is much needed in India. Lebanon crisis threatens one of its few unifiers, the army. And we have home working boom risks loss of 6 million UK professional jobs. Now that might please some who hate the banks. 1 in 5 jobs based in the UK could be outsourced to other countries in the wake of the coronavirus pandemic, threatening the loss of well-paid white-collar important. That's according to the Tony Blair Institute for Global Change, which warned that 5.9 million anywhere workers, from graphic designers to software programmers, are at risk, many of them in London and the southeast of England. And part of the reason for that is because these people are paid the most in those areas and the cost of living is the highest in those areas. And we want to just add to that, moving forward perhaps more than a year or two, the whole concept of artificial intelligence and robotics, the vast improvements being made in those areas, are also going to have a profound effect on the number of jobs for what we call general basic tasks. We're already seeing it on things like boxing and packing with robots doing this. We can see it in the car industry. Many cars today are primarily made 90% by robots, and we see it in supermarkets, and it won't be long before shoppers put the goods in their basket. And we've actually seen prototypes of this, and I think some shops have experimented with this, and they put their goods in the basket and they just roll it through this electronic device with not taking the goods out individually. The device tots up everything that's in the basket automatically. It's not perfected yet, but it exists. So relatively low, what we call low-key jobs. That doesn't mean they're not important, but you need limited training for those jobs, will eventually be removed. And that's going to be a huge problem for policymakers around the world. So you're going to lose a lot of white-collar jobs to other countries. You're going to lose a lot of low-skilled jobs. That was the word I was looking for, not key. Low-skilled jobs will also disappear over time. So what is the world going to do with an increasing population when the number of people in work reduces? Okay, looking at the US news, according to the BBC, main headline, California drought may have solved plane mystery. US Senate votes to make the Juneteenth a holiday. Now, this is quite an interesting story we looked at ourselves this morning. Juneteenth marks the day on the 19th of June 1865 when enslaved black people in Texas learned they had been free, and Congress has agreed to make it a holiday. They attempted to do this last year, but a Wisconsin Republican objected to the cost of adding another federal holiday to the calendar. He said it would cost $600 million a year to give government employees a day off. We have to say we are against anything that is racist on all sides of the fence, but we do find it rather amusing in one respect, and we're not making light of the importance of this, but we do find it amusing that the one thing that Congress can agree on both sides of the fence ultimately is a holiday for which they themselves will benefit. Very surprising. Harvey Weinstein can be extradited to California because of new charges, and Airbnb reportedly pays tourists $7 million after rape. More importantly, Biden and Putin to meet today with relations at a low point. We shall see how tough they shall be. And billionaire Mackenzie Scott gives away £2 billion more. The Amazon's founder ex-wife said she chose 286 teams empowering voices the world needs to hear. And finally on the news, US passes 600,000 deaths from COVID-19. So, what's been happening in the markets? Well, yesterday we saw the Dow fall 94 points, the S&P 500 down 8, and the Nasdaq Composite down 101. Again, relatively small percentage change. Frankly, anything less than 1% today we regard as negligible. UK market today up 21 points. That's the FTSE. European, so the Euro stocks up 4. The DAX, the German index, is down 20. The French CAC is up 9. Again, still relatively small fry. And Asia Pacific overnight, with the exception of the CSI 300, which was down 1.6%, the rest of them within our 1% margin of tolerance. Oil prices, crude oil, WTI, up 34 cents at 72.46, and Brent 74.34. We are now quite plainly in this $70 category, and we don't think it's coming down much anytime soon. The dollar index marginally down at 90.45. It opened at 90.53 this morning. It's been as low as 90.44 and as high as 90.57. Okay, what we've all been waiting for, what's been happening to the gold and silver price. But before we do that, let's take a quick look at economic news, because this, as we've pointed out on our weekly update on Saturday, and then on Monday and Tuesday updates. Today, or rather yesterday, was the important day for economic data this week, and we can see that retail sales were down in May by minus 1.3%. Now, for those who have a sharp eye, you may have noticed that the figure for April, when we looked at this yesterday, was 0% change, and now it's up 0.9%. And the reason for that is that each month they will adjust the previous month's figures as more data comes in. And that is what they've done. They've updated the retail sales figures. This minus 1.3, though, is considerably lower than market expectations, and that did have an impact. However, countering that was the producer price index, which came in at 0.8%, much higher than the previous month and much higher than the median forecast. And in fact, its rate of growth is the fastest annual rate now of the producer price index for 11 years. Industrial production marginally down, capacity utilization marginally up. Now, absolutely key today is the Federal Reserve announcement, the FOMC announcement, and Fed Chair Jerome Powell's press conference. Now, that is absolutely crucial, and that is what's going to have an effect on the market, depending, of course, on what they say. Now, we are pretty confident they're going to be just mention in passing the issue of tapering their bond buying program. And for those of you who perhaps haven't fully kept up to date, and even if you have, as a reminder, at the moment, the Fed purchases each month $120 billion of assets, 80 billion of US debt, and 40 billion of mortgage-backed securities. But this has caused the Fed's balance sheet now to rise in excess of $7 trillion. And that is a record high. Can it continue to do this? Technically it can, because they can print as much money as they wish. But in reality, that does have, despite what critics say, it does have a huge knock-on effect, no matter how much they try to mask it. The concern about inflation obviously is such that they're going to have to give a message out to the markets in order to marginally strengthen the dollar, but they don't wish to put the economic recovery in jeopardy. So, looking at gold, what has happened to gold? Well, it's now $1,859 as we speak. It opened or closed Friday at $1,877, so that it's down roughly $18. We can see it fell relatively dramatically. We're only talking about $20, but nevertheless on Monday recovered, but it's dipped again today ahead of the announcement. I think there is the slight fear that the Fed will be more hawkish than dovish, and therefore that will act as a headwind against gold. Now, we have to say gold is currently seen with a degree of support at $1,855, so it's only $4 off that support level, and resistance at $1,885. The bad news for those holding gold, if the technicals are right, is that short and medium-term momentums have turned negative, and both the MACD index and histogram are suggesting lower prices. Again, we think that's going to be predicated by what Jerome Powell says today. Looking at silver, silver's $27.75, closed last week $27.93, so it's down 18 cents. Again, same for Monday, it recovered. However, it did dip yesterday to its lowest for the week at $27.45, and it's recovered, showing some strength now the latter part of this morning. and we shall have to see, of course, how that actually pans out. The resistance level is at 28.35, so of course there'll be the psychological resistance at 28, but main resistance, technical resistance, comes in at 28.35. And support is really seen, the best support or strongest support is at the 50-day moving average of 26.96. Now the MACD index and histogram are also pointing to lower prices, which again does not herald good for those holding silver, but may be good news if the technicals result in reality for those wanting to buy. And then moving over to Bitcoin, we can see that Bitcoin, this is the day chart, or, well, I say day, it started on Monday evening and it's come through to Wednesday morning, and you can see the choppiness in Bitcoin, and $1,500 is the difference between today's high and low, which in Bitcoin terms is relatively small. It's relatively down on the last 24 hours by $584, but on the last week, I think it's up off the top of my head, yes, $7,000 in the last week. What we will say about Bitcoin, we're actually attending a fintech conference at 11 a.m. this morning, where senior people within the banking industry will be debating this whole concept of blockchains and cryptocurrencies and how they will adopt and adapt to this new changing investment and financial landscape and environment. That's it. I want to keep these as short as we can. Today is important FOMC meeting, and then tomorrow morning we'll comment upon what was said by the Fed and what's likely to happen moving forward. But we will, of course, get some indication because the markets will have at least moved in part as a result of Jerome Powell's conference. Thank you for listening. Please give us a thumbs up if you like what we're covering. Subscribe to the channel, press the bell sign, and until tomorrow, have an enjoyable Wednesday. Disclaimer. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.